Will this rally continue into the new year? Let's ask Tim Seymour. He's the CIO of Seymour Asset Management, a CNBC contributor. And you have some kind of clever ways for those who don't want to have to make a call on this one way or the other. One of your stocks in particular. Am I going to, am I jumping ahead here if we talk about Rio?
Jump anywhere you want.
Do you want to start with just the metals?
Well, I'm thinking about it. It's Christmas Eve, and we got Burl Ives going silver and gold over and over.
Gold.
You could,
yes, we've been talking about this.
You might want to quit your day job. Don't quit your day job.
But I liked also what we heard last hour, where they were talking about, look, gold might have strong fundamentals in the case of central bank buying. And Jeff Curry last week was saying, look, he thinks a lot of these metal trades are going to ultimately play catch up to establish their historical ratios. He likes platinum. He said that also the EU is relaxing its kind of switch over to away from combustion engines.
Right.
That'll favor it.
Right.
So do you think everything else plays catch up to gold? Do you think the whole thing needs to take a pause here? Is silver more speculative, or does it have a better usage case? I'm just curious.
So it has industrial use, but I love gold. I think gold's 6,000 by 28, if not before. We know the central bank narrative. We know the asset class narrative. Morgan Stanley out there saying it could be up to 20%. I don't know. I do know that the deficit side of gold is also not as understood. A fun fact that many people maybe have heard, you've probably heard this, but all the gold ever mined could fit on a football field 2 to 3 feet high. That's it. Yeah. And there's not new supply. New mines take 6 to 9 years. We love to talk about that. We'll probably talk about copper in a second. We'll talk about copper. It's all, on some level, there is an industrial metal story that follows. Some of this is Fed-driven. Some of this is deficit story. Some of this is kind of central bank dynamics. I think as you get into copper, it's a case where there really is a deficit dynamic. We heard this morning from Antofagasta, which is one of the largest Latin American copper producers, in their sales to China, that the processing fee, they've cut that to zero. You only do that when there's really tight supply. So what's going on in copper, combine that with some global cyclicality that I think is probably better than people had expected. Yeah. I think copper and I think industrial metals are following, and yes, silver has industrial use, but I think some of this is just a silver catch-up trade to relative historical.
So you think it keeps going? Let's move that along then to your nice and naughty list.
Yes.
On the nice list, one of the names is Rio Tinto. It's up 36% this year. I mean, it's not as good as silver and gold, but it's something.
No,
why do you like this one?
It's like you, Kelly. Nice this year. Probably you'll be nice next year. That's who you are. I think Rio, the story is coming around both in terms of the copper production. This was at 1.15% of the top line. It's probably going to be closer to 40 out a couple of years. They have the fastest copper growth of the integrated miners. I think if you look at also just where they are selling iron ore and some of the core other parts of the bulks that they're involved in, this is a company that I think is almost intrinsically cheap to the underlying.
We've heard of people making the case for Freeport. I don't know if you would say, yeah, one or the other, if you feel more strongly about Rio or...
I feel very strongly about Freeport, too. I'm long Freeport. You can get the copper miners ETF, COPX, and if you look at, that's a great looking chart for the reasons we're talking about. I like Freeport. Also, Freeport has gold exposure as well. What I like about Rio is it pays a really nice div, which isn't a reason to buy a stock, but the capital discipline for them is extraordinary. I think you have upside optionality on China if you get anything in terms of an uplift in the macro in China. This has always been a big part of the story, but more importantly, this is actually a balance sheet that's never been better, and I think it's the best of the diversified miners.
This is right. I do wonder about inflation next year, but that's a side note. The one more stock on your nice list, then the naughty one makes me laugh, so I want to get to that. But UPS is one that you like for next year. Again, talk about that one. Kind of not a great, like it's down 20%
Yeah,
year
no,
to
I mean,
date.
this is kind of like, this is the story of my life, like naughty to nice. Like I was definitely at one point, and I think this is a case where UPS is about relative improvement in their core business. What we just saw in their third quarter numbers where, first of all, they beat consensus, they upgraded their 4Q, but actually U.S. margins are going a little bit higher, even at a time when year over year U.S. volumes are going down. That never happens, and it's telling you that they're running this company better. It's certainly cheap to itself. You're also paid a decent div. Again, not a reason I go out and buy companies. Yeah. I am long this one. But I do think this is about also a macro story. Look at the chart on FedEx.
I was going to ask, would you do that one too?
Well, I think it's getting pulled higher because I think the story around transports remains very constructive. But this is one that really was naughty, and it was about showing the operational improvement, and I think we're there.